Hello everyone! Hey, welcome back to ASX Market Watch. Thanks for joining me another time. It's really good to have you here, checking out the markets and checking out where the indexes around the world, or the indices around the world, are heading these days. And in fact, really, to be absolutely honest, there is not a lot going on in the markets right now. I mean, maybe on a longer term scale, yes, but on a shorter term scale, it's a little bit boring at the moment. But that's okay, because when things get boring, what will I do? I will look at predictions. That's right. Even though I don't really like doing them. And to be absolutely honest with you as well, anyone, like any guru over history who does predictions, still only gets it right around 50% of the time. No matter what method they use, they could be using financial astrology, geometric circles, they could be using Fibonacci, Gann, whatever they want. Seriously, it all reverts back to around about approximately 50% win-loss ratio. However, I still do them because, quite frankly, it interests me. And it's a little bit of fun too. So let's check out the markets today. And again, thank you heaps for joining me. It's really, really good to have you. So the first one, we're looking at the ASX Top 200. ASX Top 200, really simple stuff first of all. Got our beautiful trend lines as always. Yes. They're so simple, but they really do work. Crossed it in April 2010, or late April 2010. And now we've got this downward movement here. So what are we expecting though in the market? And I'll just see if I can enlarge this a little bit for you too, because what I'm looking at is there we go, a Fibonacci extension, and it's also a Gann extension. I use both. So Fibonacci is just a number sequence, and people have found that it works well in the markets as well as as in many other things in life as well. Gann also had his own number sequence as well. He divided things into I think it was halves, thirds, eighths. Halves, quarters, thirds, eighths, and that sort of thing. I only use the quarters and the halves. Basically the quarters. Looks really good. Works for me personally. May not work for everyone, of course. But this is from our last move, so from March or April 2010 to the bottom as we know it at the moment, which was also in April 2010. Well, that was hell of a month. If we look at that, here we go, and I'll just enlarge that so you can see it. Now, as you can see, the market has not been able to retrace back 50% of that downward move. Now, what that means is, according to Gann, this is the one according to Gann. So basically, if a move can't retrace 50%, or 50% is the strongest retracement level, so that's where it would likely to be finding resistance, and it did. But also, if a market does find resistance at the 50% level, then it has a higher probability of traveling 100% of the previous move. Now, what that means for this is 100% of the previous move is approximately 3,770. So we're looking at a range around here, and I'll just enlarge that a little bit. So basically that's the whole move. So that's from 2009 to 2010, that beautiful bull run that we had. Now the market's gone sideways. Now it's heading down. And if we were to believe this Gann methodology, that the 50% is the strongest retracement level, and if it doesn't reach it, or if it finds resistance there, then it will travel 100% of the previous move. The possibility or the probability of that move to 3,770 is high according to that methodology. So I hope that helps on the all odds. And again, that's just that's what predictions do. And again, I must say, in all honesty, they don't get it right 100% of the time. So still stick to your rules, stick to your solid entry and exit rules, and stick to your stop losses and money management as well. That's the gold, guys. That's where the gold really is. So Dow Jones is next. Again, really quickly. Hey, there's that fancy trend line. Wow, it's such a fancy tool, that one line on a chart. But again, guys, I can't stress how powerful it is. Was crossed in May 2010, and so then we've had our previous move on the Dow Jones as well. Now, what I want to show you on the Dow Jones is from our recent move. Now, this is over April 2010 as well. Now, let's just see if I can enlarge this for you. See this single bar, how it started low, went up through the day and closed low as well. Now, I was showing you guys this this on the opposite end of the scale, but it was on the bottom, so it goes down throughout the day and then closes high, and that's actually a strong, or not a strong, but it's a buying signal for some people in their trading methodology. This is exactly the opposite. So what it's done is it's given this sell signal, as some people would take it, and it's also in candlesticks. I think it's called a, what's this one? A shooting star, I think it's called. It's one of the dojis, basically. And again, I don't know all the names for things, but I know how they work and why they work, and that's really what you do need to know. That's the good stuff. But where has it happened? It's happened at the 50% retracement level of the previous move. And so that is an extremely strong signal, and of course the market headed well down below that from there. So on the Dow Jones, again, on the Dow Jones, it hasn't crossed above its 50% retracement level. Now, according to Gann, as we said previously, the probability of a 100% move from there is fairly high, according to that methodology. So 100% move would bring us down to 9,150 on the Dow Jones. Now again, that's just if you were to subscribe to Gann's methodology of that, and you know, he had quite a few good methods. I really respect what he did. So that's on the Dow Jones. I hope that helps. And again, as you can see, like, that wouldn't be too far a stretch, really, for the market to head down to 9,100. And in all honesty, then the market could probably have a bit more room for gains, like maybe be a bit more fairly priced and that sort of thing, and more buyers would start coming to the market. But again, that's pure speculation on my part, so I will not go any further there. Last one we want to check out is the FTSE. Now, I've already drawn in my trend line here because it is so easy to do. As you can see on the FTSE, well, I mean, if you wanted to get really shorter term, the FTSE was crossed short term on the 22nd of April 2010, got a really short-term signal there, and I'll just enlarge that a little bit. So there you go, and we got our lower trough followed by a lower peak followed by a lower trough, which is a little zigzag pattern down after the trend line, which is what I also look for. That's basically confirmation of the downward move. Hope that helps on that one as well, guys. But yeah, so April 2010, voila, done. It's a short-term downward move. Now it's heading down. On the FTSE as well, now, even though the market has bounced back quite a fair way on both the FTSE and the Dow Jones, of that previous move in April, as you can see, 50% retracement level didn't even reach it. So could not reach the 50% retracement level. It's happened on the FTSE as well. So it's obviously, if you think markets are not related, then this would show you one way that they are related. I personally believe that, you know, all the markets around the world, and it's actually been proven even before we had the internet and that sort of thing. If you want to get a book called The Wall Street Waltz by Ken Fisher, I think his name is, absolutely brilliant book, guys, and it will show you in the late 1800s that the markets were actually related as well. They had depressions and recessions at exactly the same time, or almost exactly the same time, even without the internet and like high-speed news. It's crazy stuff. The world is truly interconnected, there's no doubt about it. And if we were to look at our Fibonacci extension and our Gann extension from that move just quickly, and again, even though the FTSE has bounced back a fair way, so this is probably less likely, but if we were to believe that 100% move of the previous move, it'd bring us down to 4,400 on the FTSE, and I'll just see if I can get a bit more, whoop, there we go, a bit more space there. So that will bring us, as I said, done deal. Yeah, so around about 4,400 on the FTSE. It's probable, according to that methodology. Is it possible? Well, again, all you have to do is follow your trading rules. So don't base everything on predictions. As I said, they're a little bit of fun, and it's good to know. It's good to know what to expect if you can, or if you know how to do them. But again, use your own personal trading methodology, your entry and exit signals, your money management, your stop loss. 3 most important things in the entire world if you're a trader or an investor. Seriously. And stick to those things and you'll have a happy, long, and merry life. At least that's the way I see it. So guys, thank you so much for stopping by anyway. Hey, it's really good to have you here, and it was a little bit of fun today, checking out where the markets could probably be heading on a probability basis, based on certain methodologies. And again, that's what the market's about. Have a little bit of fun. have a little bit of fun, and you know, use everything that you know. Try and make a little bit of money in the markets. Happy days. All right, guys. I'll see you next week. Have a great week. Okay. Bye now.